Hello. Well, when you look at the headlines these days, you could be forgiven for thinking that the end of the world is nigh. We have Cyprus battling its debt issues, North Korea threatening nuclear war, and a whole range of other issues that could make you think that it's probably much better to stay out of the market. But what is the market doing? It's rallying. We've got all-time highs on the US markets, and the Singapore market's been doing pretty well too. Edmund So is with me here from IG Markets. You're a market strategist, so tell us what's going on, particularly in the US markets where the economy is also not yet out of the woods.
Okay, in my view, in US, the housing market has turned around. Various indicators has shown that there's some recovery in US. And the confidence level has improved accordingly, and we have strong liquidity flowing into the market. That's why in US Dow Jones and S&P, you can see that they're breaking new high.
Well, we can see that right here. I mean, the charts just look like we're having a wonderful time economically.
Yes, it has clear resistance, and from the chart, it seems that Dow Jones is moving into the target of 14,700 in the near term. However, in China's side, we could have some risk as the trend is showing some downwards pressure.
So, let's focus on the Dow for the minute. And what we can see here is that it's so far above those moving averages. So that tells us that actually there's a lot of money still in the market.
Yes. You can see that the charts is above the moving averages, and they have cleared the major resistance. And the MACD is also turning up. So we can see that the Dow Jones and S&P are doing well because of the strong liquidity they're coming in, and the various indicators like the housing starts has also improved.
Now you mentioned the MACD. That's the part at the bottom here of this chart. Actually, for those people who don't know, what does the MACD do?
MACD actually gives you a lot of entry signal and exit signal. So usually we look for the crossing over of the center line as a signal to go for long.
I see. So in other words, when it curves up,
that's correct.
That's the time to go into the market. And that seems to be what it's doing at the moment.
Yes.
Now you've got another chart here of the Dow Jones, but this one has different indicators on it. We're seeing that diagonal line moving up. Again, what does this chart tell us?
Okay, IG Markets offer an advanced charting tools called Advanced Charts, and it can help a lot of traders to auto-plot this trend line, the support resistance, with a click of button.
Aha. So this is actually an auto-generated chart?
That's correct.
I see. So if you're not quite sure of how to do it yourself, the computer will do it for you?
Yes, computer will do it for you, and IG will offer regular training to our clients to assist them to plot the support and resistance and also the trend lines.
Let's then turn to the broader market, the S&P 500. Is that giving the same signals as the biggest stock in the market?
Yes, S&P is showing the same chart pattern similar to Dow Jones. So that means in terms of the USA market, both the Dow Jones and S&P are breaking new high, and the momentum are continuing to be strong, and they are all above the moving averages, and MACDs are on the verge of turning up.
Okay. Now, you mentioned earlier on that the China market is a bit of a drag on that. But I thought actually that the Singapore market followed more the Hong Kong market, the Hang Seng.
Yes. Typically, Hang Seng is influenced quite significantly by the China market. And China has introduced quite a few cooling measures on the property market. And a lot of China counters are coming down. And that's why it's dragging down Hang Seng, which in turn dragging down Singapore. Okay,
so this is the Hang Seng chart here, and it's by no means as clear as the Dow was with its current move. So what does this chart tell us now about the Hang Seng?
Hang Seng is very close to the support around 22,000, and it may run the risk of breaking down the support if China continue to come down. But I believe it could be just a short-term downtrend before the next uptrend comes.
Oh, really?
Yes.
And is that borne out in the second chart here of the Hang Seng index?
Yeah, Hang Seng index is showing a similar pattern compared to the China Shanghai index. So short-term wise, both are showing downtrend.
Okay, but I mean, what we're seeing here on this Hang Seng chart is there's the lines, which I guess your computer has plotted again automatically, right? There's the channel down we can see, but there's also a dotted line with the channel up. So which one is it now? Is the market likely to fall or rise from here?
Likely to fall in the short term.
I see, but the channel that seems to be going up in a diagonal fashion, is that the potential for upside?
Will be not so soon.
Not so soon.
Yeah.
Right, so let's now turn to the Chinese market, and this is the Shanghai Composite Index that you've gotten here. And this is a very, very different chart. This one has that big dip last year, and again, what are you reading out of this chart for the Shanghai Composite?
Shanghai, there was some optimism again because of the new leadership coming over, but the market has been a little bit disappointed because the data that come out of there is not as good. Especially they come out with a very strong cooling measures on the property market, which in turn drag down the China property counters. And Singapore, we have a lot of China counters listed here. Example like Yanlot and Yangzijiang. These are the counters that will be affected by the performance of the China index.
Right, okay, so let's now finally turn to the Singapore market, where I guess we're seeing all of these different charts that you've talked about come into play, right? We've got on the one hand the uplift from the US, on the other hand the gravity, I guess, coming back into effect from China and Hong Kong. So what are you now reading out of the Singapore chart?
Singapore SDI is performing very well, I think, because it's of the safe haven situation where a lot of the money from US and Europe is flowing here. And you can see that despite Hang Seng is moving down, traditionally SDI will be following the Hang Seng, but now it seems that Singapore SDI is performing better than the Hang Seng index because they are looking for yield, like for example the REITs, and also for example those are big caps. So in terms of resilience, SDR is performing better than Hang Seng.
Right, and so all of these charts came from your trading platform, is that right?
Yes.
Okay, so and so do you actually need to like go through courses and read books on technical analysis, or can you just get the platform to do all of this plotting for you?
It will be much better if the students or rather the clients can attend our training courses, seminars organized in-house by IG, where besides the plotting of the chart, they know how to interpret the lines and how to interpret indicators.
Right, so the computer can plot the lines for you, but you still need to be able to read them.
That's correct.
Right, well let's finish then where we started, and that is the whole discussion about Cyprus and North Korea and so on. In view of the fact that there are these fundamental issues still around, we're not really seeing that in the technical charts. At what point do you think that the charts will kind of have to catch up with the reality of what's going on in the world?
I think short-term wise, the liquidity rally will continue, especially Japan may print more money, so-called the quantitative easing. The US will not, I don't think they will end the QE so easily until end of this year. So I think for the first half of this year, the market will continue be driven by the strong liquidity. However, on the second half of this year, we need to be more careful in case US may reduce the QE or reduce the amount of money they pump into the system. And that's where we need to be more careful towards the second half of the year, where US dollars could potentially strengthen, which actually is usually is not so good for the equity market.
All right, so look out on your charts for liquidity and I guess the momentum of the markets.
Yes.
All right, find out more about Edmund's presentation and everybody else's at Singapore Investment Week on the website that's on your screen now, cias.org.sg/SIW2013.